You're listening to the Unlocking Africa podcast.
Even though we are indeed a company that looks at risk, we are obviously also aware of the commercial opportunities on the continent. We really believe that the three streams, political, security, and economic, are completely intertwined. Inflation relates to elections, it relates to security threats, and economic growth. People have pre-existing perceptions of risk, particularly in places like Africa. Every risk has a flip side. It has an opportunity, and every opportunity has a risk. Join in this candid conversation on the future of Africa.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we find amazing people who are doing amazing things to unlock Africa's economic potential. Today, we have another special guest, Robert Besseling, who is founder and CEO of Pangea-Risk, which is a specialist intelligence firm providing analysis and forecasts on political, security, and economic risk in Africa. Welcome to the podcast, Robert. How are you?
It is great to be here, Tessa. I'm doing great today. Thank you. And yourself?
I'm good, thank you. And it's great to have you on the podcast. I believe you've been doing a lot of traveling recently, speaking at a lot of business conferences and seminars. How has that been?
Exhausting. 3 months of back-to-back conferencing. So a lot of flights and a lot of airport lounges, Tessa.
Are you back home now?
I am indeed. I'm joining you from South Africa today. I'm back home.
Oh, beautiful. Thank you for joining us. And as I said, it's great to have you on the podcast. And I'm looking forward to our conversation today. So before we get started, I was hoping you could please introduce yourself and tell us a bit more about Robert Besseling.
Great. Yeah. So Robert is actually not from Africa originally, although I feel a bit like an honorary African. Born in Belgium, but raised mostly in the UK and in France and in Turkey and some other places. And I kind of went on holiday about 18 years ago to South Africa and never really went back. And since then, I've developed a real passion for the continent and really focused my academics, my career, and my life in Africa.
Awesome. So you are a bit of a globetrotter and caught the Africa bug and never left the continent.
An Afrocentric globetrotter, exactly.
Awesome. And as I mentioned in my intro, you are the founder and CEO of Pangea-Risk, which is why we're here and having this conversation. So I was hoping you can tell us a bit about the organization, what you do, and what you hope to achieve through it.
Of course. So Pangea-Risk was founded by me about 7 years ago. It is a specialist intelligence advisory that provides analysis and forecasts on political risk, economic risk, and security risk on Africa and actually also the Middle East.
Okay.
About 2 years ago, we expanded our country coverage. Since we were covering North Africa already, it seemed like a natural, organic expansion. And because, of course, the two regions are becoming increasingly intertwined. So that was one of the steps we took in terms of expanding our country coverage. And even though we are indeed a company that looks at risk, we are obviously also aware of the commercial opportunities on the continent, and we don't just want to spread, as they call it, doom and gloom, but actually look at, try and do away with the perception of risk a little bit.
So you mentioned you founded the company 7 years ago, and you have a focus on African and Middle Eastern political, security, and economic risk. It's not just about the risk, it's also about the opportunity. So I was hoping you could tell us a bit more in terms of why you decided to focus on those key areas in terms of political, security, and economic risk.
We really believe that the three streams, political, security, and economic, are completely intertwined. Very often you get people focusing on one or two of these, but we really want to focus on all three. And only when you understand how these different spheres in African jurisdictions interact, interplay, then you can actually build an accurate, commercially interesting forecast on a country and try and assess the risk. Inflation relates to elections. It relates to security threats, economic growth, particularly over the past few years during COVID and the impact of the war in Europe. We are seeing this increasingly, that politics, security, and economics are completely intertwined.
Awesome. Thank you for that clarification. So you detailed there the three streams are intertwined, they interplay, and they do present, unfortunately, some risk scenario, but also opportunity. So if we look at the risk for the work that you do you believe Africa is as risky as it is often perceived?
This is the main theme, really, of what we do. People have pre-existing perceptions of risk, particularly in places like Africa.
Yes.
And we try and inform, analyze, and forecast the risk. Very often people come in with perceptions of risk, which may be understating the risk, which has often been the case in other parts of the world. In Africa, unfortunately, it's been overstating the risk. Deals get done every day across the African continent. Yet when you switch on the news and read the headlines, or open a newspaper and read the headlines, you're immediately taken aback by the perception of risk that is associated with the African continent. So that's where we really come in and look at what is the risk and how does it really impact you as a business person, as an investor.
Awesome. So yeah, you mentioned there in terms of people having pre-existing perceptions, which in my line of work I deal with as well. You try to inform and analyze and find, I guess, ways to mitigate or give a realistic picture of what the risk is. I know we're talking about risk all the time, and we mentioned it's about risk and opportunity. So if you can kind of distill that for us or try and contextualize it in terms of, from your understanding or from what you do, how do you differentiate the risk from the opportunity?
They're almost indistinguishable sometimes.
Yes, very true.
Every risk has a flip side. It has an opportunity, and every opportunity has a risk. It's what you call, is a project bankable? That basically means, to what extent is it commercially viable, and can the risk be mitigated or guaranteed or underwritten in some shape or form? We are not trying to sell the risk. We're not trying to sell the opportunity. The people who use our services and our platform come to us with their ongoing projects, and they want to identify some of the key challenges, the key perils, or indeed some of the real strengths and opportunities of their projects. So that's where we try and come in.
Fantastic. So you mentioned that it's hard to distinguish between the risk and the opportunity, and you present the information to your users who then use that to, I guess, inform their decision. So if we look at the people who use your platform, who are the users of the platform?
I would like to say anyone with an interest in Africa would find the platform interesting. But obviously, we can dig down a little bit there, because on the one hand, the platform, which is our website-driven risk intelligence platform, has become very popular in the financial sector. So there we have a lot of development finance institutions at the multilateral or the regional level. We count a lot of the export credit agencies, so the government's public agencies that underwrite exports, as well as more on the commercial side. We have commercial banks, commodity traders, and insurers, brokers, and underwriters who use the platform. So that's on the financial sector side. And on the other side, we have a lot of people who are interested in corporate security. These will be managers within big corporations or institutions that look after people's and assets safety, as well as governments, NGOs, and intelligence agencies or defense departments around the world, really. We've got a lot of clients in Europe, in the US, and in Africa, and increasingly growing eastwards now to places in the Middle East and further in Asia. So again, even though there are particular people, particular profiles who suit to the platform very well, the content is really geared towards anyone with an interest in African current events and African risk.
Thank you for that, Robert. So you've detailed some of the users such as NGOs, governments, development finance, export credit agencies and banks, which for me means that your data has to be robust, very accurate and meaningful and add extreme value. So with that in mind, how long did it take to create the platforms, the systems behind it? Who is or who are the team behind the platform as well?
It's been 7 years of work on the platform now, and we're very proud of it because, of course, people who access the platform, they don't just read and access the analysis that is written on a daily basis, but they now have access to a really interesting archive of about 7 years of analysis and content. And the team behind it is a very vibrant and diverse collection of analysts who are spread across the African continent, who are well connected to the events happening in their respective countries and regions. Some of them will be country experts. Other ones will be thematic experts, like focusing on sectors or more on security than economics or vice versa. And of course, we work with a number of partners as well to make sure that we can capitalize or leverage other people's strengths and bring that relevant data to our platform users. I come from institutions previously where the analysts all sat in one office somewhere far away from Africa. And that really has been one of the main motivations, is trying to avoid analysts being far away from the regions that they cover, being closer connected to Africa, and indeed also being more flexible, more vibrant. And certainly the pandemic has opened up more businesses like that. But we were a virtual company well before the pandemic and the lockdowns hit.
So, I mean, that leads on beautiful in terms of trying to understand how you collect this data because, you know, historically it's been a conversation or a bit of a contentious point in terms of trying to collect accurate, meaningful, useful, timely data within Africa. So I wanted to understand in terms of, is a lot of your activities gathering data? Is a lot of it offline or online?
It's very much both. We have a methodology for forecasting and analysis that is based on both online and offline. In terms of how intelligence is gathered, it can be done through open source intelligence gathering, which would be desktop research, or it would be looking at institutional white papers and other public access or open source intelligence. And on the other hand, and this is really our forte, dare I say, is the human side. It is connecting with human sources, which is so important in Africa. Earlier, we were talking about the perception of African risk. And African risk is very much, at least from an international media perspective, driven by open source intelligence. And what we try and do is we try to complement or indeed sometimes push back and challenge a bit by leveraging that human source network. So important to try and get more accurate and sometimes contrarian evidence from human sources. And then, of course, it's up to us to decide what available evidence out there is most objective, is most accurate, and is most commercially relevant. And that's, I think, very important. In the end, we are not a think tank. We are not an academic institution. We are doing this not for ourselves. We are doing this specifically for a group of paying platform members of our consulting clients. So we need to make sure that the intelligence that we gather is streamlined and is bite-sized and relevant to people's work. Otherwise, no one would read it.
I agree 100%. So earlier you mentioned that you've generated an interesting archive of 7 years of data, of integrated forecast of Africa's risk outlook. I know this is an extremely broad question, but from the data you've gathered, what does Africa's risk profile look like in the near future?
As a risk analyst, I sometimes get accused for being a little too pessimistic. And I like to push back on that perception, Tersa, because yes, there are definitely risk analysts out there who may be a bit pessimistic, but stating the risk as it is does not make one a pessimist.
No.
So coming to answer your question, I'm actually really optimistic for Africa's outlook, particularly in the near future. 2020 was a rough year. Yes. Africa's economy went into an annual recession for the first time in a quarter century. 2021, for most African countries was quite disappointing. 2022 was way too volatile. Africa in 2023, as we're slowly moving towards next year, is looking a lot more positive. And I'm saying that because on the one hand, more markets are growing more economically diversified. And on the other hand, a number of countries will really stand to benefit from the continued demand for African exports. And these are not just Africa's commodities. They will be predominantly Africa's commodities, but there will be broader sets of exports. And obviously, with all the different trade agreements and different multilateral structures that have been set up, Africa really stands to benefit from this. So yes, the world is going into some sort of a recession on the back of the events of 2022, but Africa as a region is not. And even though for some regions, some countries, the economic growth rates and socioeconomic development will be disappointing, generally speaking, investors will find their most exciting commercial opportunities in Africa rather than anywhere else in the world in 2023.
That's great to hear. You mentioned you're optimistic about Africa's future outlook and you detailed growing and diversified markets, increased demand for Africa's exports, but also caveat in terms of there have been some challenges over the last few years globally and within Africa. So if we look at your risk scenarios, such as impact of election, policy changes, strikes, wars, sovereign defaults, in your opinion, which of these scenarios poses the biggest impact to the optimism that you're projecting in the near future?
Great question, because this goes straight back to that perception of risk, doesn't it?
Yes.
If you're a Eurobond creditor, you've invested in government bonds in hard currency from places like Ghana or Zambia or South Africa over the past few years, you're going to be worried about sovereign default, obviously.
Oh, definitely.
From an African perspective, however, I think the recent cases show that countries that do default eventually find a way out, and deals will continue in the meantime. Trade and export and business does not stop in case of a default. And in most instances, countries are rated to be in a state of default well before they actually have a default incident. So I'm a big believer that the risk within African countries lies progressively way ahead of an eventual default. Elections are interesting. We have lots of big elections coming up in 2023. Nigeria at the beginning of the year and the Democratic Republic of Congo at the end of the year. And lots of other ones like Sierra Leone and Liberia and Zimbabwe and Madagascar strewn around in the middle of the year. Elections really do matter in Africa. There is more and more a democratic dividend. There's more and more a transition towards democracy, despite some trends in parts of the continent. Generally, elections really do matter. And it's a showcase of people's emotions. It's a showcase of people's socioeconomic and political grievances, or indeed their state of mind at the time, how they vote, but also will they go onto the streets and protests? How will they vote? Will the election be respected or not? We've had some really interesting instances in 2022 with the Kenyan and Angola elections, of course, at the forefront. And I think the precedent for those will take us into some very important trends for the coming year. Wars are important, obviously. The Ethiopian civil war, which, let's hope is now reaching a closing chapter, affected the whole of the Horn of Africa. And I do think that other factors like policy changes and strikes in the end are very much related to how elections turn out or how economic how economic outlooks change. So I'm going to pause here because I am not going to answer your question simply because the intertwining of politics, security, and economics makes it almost eliminates any one risk scenario or one risk peril being more important than others. So I'm trying to bypass your question there, Terza.
I think a future in politics lays ahead for you. As you mentioned, the risk does lay way ahead in the future, and you've detailed the impact of areas such as elections, war, policy changes, and default with the current global economic downturn. So with that, we are seeing rising inflation, depleting foreign exchange reserves, and devaluation of many African currencies. So I was wondering if we could go into a bit more detail regarding what risk do those areas expose the continent to?
Africa at the moment is seeing various trends, and one of them is something called stagflation. Now, okay. I'm sure that all our listeners these days will have heard the term stagflation potentially ad nauseam, because it's not particular to Africa. It is indeed a global trend. And Africa certainly is seeing this stagnant economic outlook in parallel with a soaring or almost uncontrollable inflation scenario. But what is particular to Africa is the extent to which monetary policymakers are actually able to rein in the impact of inflation. We've seen central bank governors across the African continent lending rates, and they're doing so following suit of the US Federal Reserve, of the European Central Bank, and various others in OECD countries around the world. But I will bet you, Terza, that not a single African central bank governor honestly thinks that them raising their interest rates will bring down inflation in their respective countries. They're not doing it for that. A country like Ghana, for example, where interest rates are at 24.5% and likely will keep going up. Inflation just went from 37% to over 40% over the past month. And to be honest, the reports on the ground, and if you look at the basket of commodities, et cetera, that makes up inflation in Ghana, it's probably 100% hyperinflation. It's a Zimbabwe/Sudan scenario we're looking at in places like Ghana. So why are they actually raising interest rates? Because, of course, that depresses your economic outlook. And they're doing it to try and avoid that depletion of foreign exchange reserves that you just mentioned. They're trying to avoid also the devaluation or the depreciation of African currencies. This is the real reason what they're trying to do it, to try and avoid a running out of hard currency, which is so important to pay the import bill, keep the lights on, keep buying food and manufactured goods, and indeed to service these hard currency loans. So the continent really is stuck in a bit of a vicious cycle at the moment, because the specter of hyperinflation in some countries, or at least soaring inflation in most others, is not that easily avoided. And Africa may just have to run the gauntlet here, may have to run the cycle, because the impact of inflation or the cycle of inflation will be determined in the wealthy countries over the next few quarters rather than in Africa. It's only once inflation goes down in the US and in Europe and in other parts of the world, a few months later, bring in a bit of a lag, they will see inflation calm in African countries as well. So we still have quite a bit to go here, Terza, in terms of this global economic downturn, particularly its impact on African countries.
Thank you for that, Robert. So you raise a very interesting point regarding stagflation, the stagnation of economic outlook, and obviously homing in on what we're seeing in Ghana. So I guess if we look at the positives, and I know we've been quite guilty of speaking about Africa in general, but if we look more specifically at a country or region level, which country or region are you seeing the most positive outlook or opportunities going forward, and what is driving that?
Yeah, so I've mentioned a couple of countries and regions which are seeing a bit of a negative risk outlook.
Yes.
And I think on the converse side, we've got a number of countries and regions where we're really seeing those opportunities that we were talking about earlier. And usually I will answer your question by always pinpointing those economically diversified countries with strong and respected fiscal and monetary policy. Who am I looking at here? It's obviously your Rwanda and Kenya and arguably Tanzania and Uganda in East Africa. And then it's your Benin and Ivory Coast and Senegal in West Africa. And I've always believed this is the case, but 2023 is going to shock a lot of us.
Yes.
Because it's those countries that are exporting metals and oil, and particularly natural gas, that are going to be outperforming all those countries which have been prudent and diversified and careful over the past few years. The diversified countries may be the ones that are best buffered for when things go wrong, but the commodity boom that we are still seeing, particularly the demand for African commodities, is really boosting the economic outlook for a number of African countries. Which are they? Well, at the very top of the spectrum will be Senegal, and that is not because of its mining sector or its fishery sector. It's because they are going to start their first exports of liquefied natural gas to Europe from 2023. Slightly delayed, but they're back on track post-pandemic, and that will start next year. And the other ones are Democratic Republic of Congo. The next industrial revolution will be powered by minerals found almost exclusively in the Congo Basin. And for the DRC, for the Democratic Republic of Congo, this offers an ocean of opportunity going forward. And then there are other ones as well, countries we sometimes forget about, like Niger, which on the back of oil and on the back of its uranium and other metals mining sectors is really doing very well from an economic perspective. So it's not just those prudent markets anymore, which we should pinpoint. In 2023, there are going to be a couple of countries which are really going to pull ahead of the pack, and they'll be doing so because of their commodities and the exports of their metals, crude oil, and natural gas.
So are we seeing a return of African almost like mono economies?
Not thinking that just yet. I think Senegal is already a diversified economy. It's far more diversified than its other peers in West Africa. It's just that one sector in Senegal is seeing more demand than other sectors. Then, of course, crucially, of course, is how do we avoid the mismanagement of those resources going forward? So obviously, countries that already have good governance in place, that have those fiscal and monetary policy frameworks, that work with international institutions like the IMF and others, they are probably the best set to be dealing with this sudden influx of foreign exchange revenues in the coming years. Others, arguably a country like a Democratic Republic of Congo with very weak state institutions and a volatile political outlook around those elections at the end of 2023, those are countries which potentially are going to struggle more with the management of their commodity export sectors and how to spend or potentially save all those revenue flows that they're going to be seeing coming in soon. I don't want to say that countries are guaranteed to go bust and to fail if they see a commodity boom, but there's a lot of work that needs to happen after those revenues come in. The work is not done just by exporting commodities. The work only begins then.
I agree 100%. I don't think that's something you could argue with. So I guess from your perspective, which countries do you feel have the relevant governance in place to positively take advantage in terms of the increase or the boom in commodities?
Countries that, generally speaking, have had a central banks that have been well governed, governments that have been stable, and that governments or political systems that have allowed for political transitions without violence and without confusion. And generally also countries that try and stay away from controversy. In other words, countries that have sound international relations, that work well with investors from all across the world, not just the US and Europe, but also China and other Asian investors. And increasingly, the Gulf, the Middle East, is such an important partner for Africa. So there are quite a few boxes to tick to address your question. But I think good governance from a monetary and fiscal policy perspective, political stability, diversified economies, and foreign policy that allows African countries to enjoy doing business and enjoy sound relations with investors and business people from across the international spectrum.
Thank you for that. So I guess we've talked quite extensively about the positive outlook and the impact the increased demand of African commodities will have on specific African economies in the future. I don't think we can probably have a discussion on Africa's future outlook without discussing the African Continental Free Trade Area. So I wanted to know from your analysis or the intelligence that you gather, what impact does the development or the progression of AfTA have on your risk or opportunity forecast?
So I'm a big fan of free trade. I really am. From a personal perspective, I think it will do great things for Africa. I'm a bit of a skeptic when it comes to the African Continental Free Trade Agreement, though. And let me expand on that. And that's simply because I think it's still too ambitious. I'm not saying it is definitely not going to happen, because it's already being rolled out and deals are being done. Over the past 2 months, I can think of deals done in Ghana and in Rwanda and in Zambia, I believe, that all have followed the parameters of the AFCFTA Continental Free Trade Area Agreement. But the agreement is not yet fully implemented. It excludes many manufactured goods. It excludes automotive goods. It includes textile. There's a couple of big holdouts in terms of sectors and countries that remain quite cynical on the agreement. So where will the African Continental Free Trade Area go from next year onwards? I think it will mostly benefit the larger, more diversified economies like South Africa and Kenya and Egypt, of course, potentially also Nigeria or parts of Nigeria. Smaller countries and medium-sized countries will take a few more years before they actually see the benefit. And in fact, they may see some job losses and may see some killing of businesses before the value creation can actually start. And in terms of looking at the continental agreement from a continental perspective, I don't think we're there yet. I think what the Continental Free Trade Area allows for at the moment is a regionalization of trade that boosts intra-regional trade within, for example, the East African community or within the Southern African Development Community or within North Africa or ECOWAS in the West, etc. Countries that are close to each other will trade more with each other and then slowly will move towards that continental aspiration. I'm saying aspiration because it's an ambitious and very valid objective to have, but I'm still a little bit cynical in terms of the timelines, the implementation phases, and some of the benchmarking in terms of how soon are we going to see the benefit of this and who will actually see it. So let's not scrap it, obviously, but let's keep rolling it out gradually, and let's hope that more Africans and more African countries will start to see the benefit of this going forward. But don't expect big changes in 2023.
Thank you for that, Robert. I agree. I mean, I'm a huge advocate and extremely positive about AfTA, but I think we need to be quite realistic and pragmatic that it's not an overnight success. It will probably take the next 5, 10, 20 years before we actually see the benefits of AfTA. So for you, how does AfTA need to position itself to fully benefit the whole continent and not just the major economies that you mentioned, such as Nigeria, South Africa, Kenya?
Of course, in the conversation of free trade, I think allowing free trade to play out will be absolutely key. And the starting point here has been about commodities.
Yes.
Commodity free trade has been easy. We've already seen bilateral free trade deals. We've seen the US with its AGOA incentives. We've seen the EU and China with their bilateral free trade deals. Those are mostly commodity focused. It is only once we start to look at tertiary and secondary sectors that add local beneficiation and allow for local value adds through employment and tax payingship and education and skills sharing, only then do we see a move away from that focus on big developed economies and move towards more the industrialization of entire regions and aspirationally the African continent.
Fantastic. And I guess that's something that resonates with me. I totally believe Africa's future development lies in mass industrialization. So outside or beyond after, what opportunities you believe lie ahead for Africa?
I've been talking a lot about commodities in this conversation. That makes sense because that is at least, where the demand for Africa lies. But, Africa's opportunities are not just on the demand side, of course. That would be way too weak. And as we've seen, it would expose the continent towards these cycles. In fact, we have to look at the supply side. We have to look at African cities, African entrepreneurs, and African innovators. And increasingly, we are seeing excitement in startups. Africa now, I believe, has 6 or maybe even 7 unicorns, companies valued at $1 billion or more. If we look at venture capital, we are seeing a drop in earnings and a drop in deals across the world. In 2021, we actually saw Africa was the only place in the world where venture capital was actually still seeing an increase in earnings. It slowed a little bit in 2022, which makes sense in terms of a lag on the perception of risk. But I do believe that Africa will be one of the first regions in the world where we'll see this pick up again going forward. It's the entrepreneurial spirit of Africans, particularly in the big cities, which provide that innovation and creativity. That is really the focus of Africa's future. So we cannot downplay the impact of commodities, but we have to look within Africa itself in terms of its population and skill set to look for longer term, more sustainable opportunities going forward.
Fantastic. You've detailed there the opportunities and the future lies in the big cities, entrepreneurs, innovators, and also detailing the increase in terms of funding received from startups via venture capital. So if you look at, I guess, the opportunities and future and how best Africa can position itself, how do you believe African economies need to position themselves so that they are less risk exposed in the near future?
It's all about communication, Tirsa. I strongly believe that. African governments always expect for investors to mitigate their risk themselves by bringing in political risk insurance cover or add due diligence, or in fact, even to hire consultancies like mine, like Pangea-Risk. But what African governments themselves should be doing is communication. It is being open and honest about the operating climate in African countries, what the risks and the opportunities are, honestly and candidly, talk about these with potential investors and trade partners, and to build up structures within countries that allow for the mitigation of risk or indeed risk management. And that is not yet happening. Earlier, we were talking about the entrepreneurial, innovative spirit of African communities, but from a government perspective, some of this creativity is still lagging. And this will be crucial. Open communication and candid conversations about the actual operational climate in African markets is crucial. And that will change the perception of risk, as we mentioned earlier, but it will also actually mitigate the exposure to these risks for foreign investors as they move into African countries.
Thank you for that. So you mentioned that African governments need to be more transparent about the risk and opportunity and build structures to mitigate risk. So from that perspective, from a risk perspective, how is Africa performing compared to other emerging markets?
That goes back to the perception of risk. And I like to use an example comparing Africa and Latin America. Latin America has seen a spree of defaults over the past, 50, 60 years. And it has seen a spree of expropriations of assets, of companies, of entire mines. And we've seen it in places like Argentina, but actually across the Latin American spectrum, we've seen it over the past 50, 60 years. And even just looking at Latin America now as one region, we still see that trend continuing. So obviously, I'm picking here on Latin America, but I'm doing it on purpose because the perception of risk in Africa may be higher than Latin America, but the actual commercial value of losses suffered in Africa, and I'm sure any insurance underwriter will agree with me on this, is lower in Africa than it is in some comparative regions in the world.
Yes.
Expropriations, fine. We've seen expropriations of commercial farms in places like Zimbabwe. We have seen very limited instances of commercial mining operations being expropriated in the Democratic Republic of Congo. I think it was about 15 years ago. And those farm expropriations were about 20, 25 years ago. My point being that the perception of risk in Africa is way higher than the actual commercial value of the risk faced for many investors. And I think that's absolutely crucial. It goes back to our conversation earlier in terms of how we have to change the perception of risk, because in fact, comparative to other regions, it's not that bad.
I agree. So I guess, as you beautifully detailed, the actual risk in Africa is not as high in comparison to other similar or emerging markets. So if we go back to your data in terms of what you're seeing, looking at the future, what trends are you excited or positive about?
There's lots to be excited about here. We've seen African entrepreneurs creating new ventures to meet local demand. We are seeing more local financing of projects, financing happening from local entities rather than from foreign investors. And I think this is key going forward. We need to be more excited about Africa's future from an Afrocentric perspective. That's not blocking out international partners and foreign investors, but more can be done by African communities for Africa. And I'll give you a quick example here. People are always looking at how are we going to finance Africa's trade finance gap, or how are we going to fund Africa's infrastructure financing gap. Both of these are hundreds of billions of dollars per year deficits. And yes, of course, we have to look at development finance institutions. And of course, we also have to look at international investors. But what is interesting now is that we have capital within Africa from government, but more likely from institutional investors like pension funds, from local startups and financial institutions. And those funds also need to be leveraged to drive commercially viable infrastructure and entrepreneurial investments to make Africa's future more about Africa rather than making it about the foreign aspect. It's a bit of an overarching answer there, but I think you can almost apply it to almost every aspect in Africa that we should be excited about.
I guess the future does look positive, which is in keeping with a lot of the conversations I guess you and I have. There are many challenges, but there's also many opportunities, and I believe the opportunities outweigh the challenges. So looking at the future, where do you see Africa in 5 years' time from I'm not sure if I should use the word risk anymore, because I guess during our conversation, most of the risks we've turned into opportunities. So where do you see Africa in 5 years' time from a risk and opportunity perspective?
It's all about lessons learned, I believe. When we do see challenges, as we've done over the past few years in Africa, there are lessons learned. Some countries have done better than others during the pandemic. Some countries have done better during this period of stagflation than others. It's about lessons learned. And I think there, looking at the more optimistic side, I think African governments and African businesses are taking some of these lessons on board and building a more sustainable and more integrated future. So I think that is where Africa's timeline in this medium term, in this 5-year perspective will go. And please note that I avoided the R word for during that answer completely.
No, it's fine to use the R word. It's fine. So closer to home, where do you see yourself in Pangea-Risk? What will you be doing in 5 years' time?
We have been growing quite significantly over the past few years, mostly because people have not been able to travel. So us having a network of people across the continent has been very valuable. But now that the pandemic is slowing and people are traveling again, we are now getting involved in different aspects of the business processes. And that's very much, we get involved when deals are actually happening. And that's the most exciting part of our work.
Amazing.
When we see investors signing off on big infrastructure projects or on big export finance projects, then they need due diligence done, they need security audits done, they need analysis on counterparties, on the political operational climate, and this is increasingly what we are doing. I think it's very exciting to not just look at Africa from a potential investment climate, but actually being an active partner in hedging risk in ongoing investment projects. So that's where I really want to see development of Pangea-Risk going in the next 5 years' time.
Awesome. That's great to hear that the company is growing and diversifying at the same time, and you're being involved in the nitty-gritty and the bones of some substantial deals on the continent. Amazing to hear. Thank you for that, Robert.
Quote of the week.
As people, we often have quotes, mantras, proverbs, or even affirmations that keep us going when times are challenging and when times are good. Do you have one that you can share with us today?
Wow, what a great question. There's probably quite a few that come to mind. When I started the company 7 years ago, I've got a bit of a classics background in Latin.
Oh, amazing.
And I thought of Pliny the Elder, who said, out of Africa, always something new. And I think that one every day is true. Good or bad, Africa keeps surprising. But in terms of as a company, we have a good slogan. And that really comes down to the value of intelligence being in the factor of surprise. And I think for a risk intelligence company, that's so crucial. And that really goes down to what Pliny the Elder says. Africa surprises us every day. But risk analysis should not bore people either. It should not be too mundane. We should be candid and open in our risk analysis. And we try to surprise our clients, just like Africa surprises our clients in our forecasts. If we are saying something which people already know, then please stop paying us.
You took the words right out of my mouth. So yes, I agree 100%. You have to surprise your clients because you are the experts. You have that data, you have the intelligence on the ground. So you'll always reveal something that hopefully they don't know.
Indeed.
As we've come to the close of today's conversation, it's been an amazing conversation. I was hoping you could give us some closing remarks and final calls to action for people who are interested in what you do, probably interested in exploring risk analysis on the continent a bit further.
In terms of a final remark, I think it goes back to what we were saying earlier in terms of the value of risk analysis. And as risk analysts, we are often associated with sometimes the negativity or the pessimism of what is defined as a risk. And I try to push back against that because I think it's so important to build that communication, that transparency, that candidness in conversations. In a continent like Africa, sometimes is not fully developed yet. And that's why the value of risk analysis and risk forecasting really can play an important role. It's being candid about the risks, not just how they are perceived, but how they really are, how they can be foreseen, how they can be managed or mitigated, and indeed, on the flip side, what opportunities they can bring forward as well. So on that note, I would invite anyone who's interested in African risk and African trade and export and investment to reach out, contact us, because we've got a great platform and people are very welcome to join that platform for a couple of weeks to look at our analysis and content for a couple of weeks on a free trial basis and take a look for yourselves. Join in this candid conversation on the future of Africa.
I agree. It's a great platform. And thank you for your time today, Robert. That has been an amazing conversation. We've turned many potential negatives into positives. We've tackled a range of difficult subjects, highlighting the opportunities and obviously being very candid about what the realities are on the ground and what the realities are in the future. So thank you again. It's been a very enjoyable conversation and I've taken away quite a lot today.
Thank you for inviting me. I had a great time.
Thank you, Robert. And hopefully we will speak soon.
Absolutely. It's been a real joy doing this with you. Thank you very much, Tersa. All the best now.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you and see you next week for the Unlocking Africa podcast.